Okay, before we get into prop trading, let's talk about the trading path you should take that I recommend here at MicroTrader. It's all about low risk profits. So the first thing you should do is just notebook trade. That's literally taking out a piece of paper, writing down your entry price, writing out your exit price, and just notebook trading. Then I want you to open up a paper trading account at a place like Tradeovate so you can learn to use their DOM and start paper trading using our system. After you do that for a while, and this is where you actually want to be careful because a lot of people with paper trading accounts start doing stupid stuff. They start trading 10 ESs or 20 ESs, taking trades that they would never take with their own money, and they start getting a little unwieldy inside of the paper trading account, which might be the first clue to your lack of discipline. So what I want you to do is just paper trade for a little while. I don't know what that is. That might be days, it might be a few weeks, it might be a month. And then I would like you to sign up for a prop trading account. And the reason why is with a prop firm, which is going to be the main topic today, you put down a little bit of money and now you've got some skin in the game to trade. It's much like if you play golf with the guys and all of a sudden you bet $10 on a hole. Well, you're going to start playing much differently. Or you're playing cards with the family and now you got quarters or dollars involved. You just play at a different level when you have skin in the game. And that's what a prop firm allows you to do. Is you put a little bit of skin in the game and you will play differently. You will trade differently. It will teach you so many amazing lessons. It's just absolutely incredible. Then when you take your withdrawal, I want you to put 50% into savings and then take that remaining 50% and put it into a real account and start trading with house money. Okay, so none of your money is at real risk. This is what I like you to do. This is a path of low risk profits that very little of your money is at stake. And that's why I recommend prop trading as the third step in the trading path at MicroTrader. Okay, let's talk about a principle that you must understand, and that is called trailing drawdown. Now, at the beginning of the Zoom call, I was a little turned around on what the trailing drawdown was, which was pretty embarrassing, but a couple of my members got me straight, and one of them used a phrase that I will use from now on. It's called the highest watermark. Okay, it's your highest profit. So your trailing drawdown begins at your highest watermark, your highest profit. And the easiest way for me to illustrate this is to show 5 days of trading here. Day 1, day 2, day 3, day 4, and day 5. On day 1, you start at 0. The very first trade, your highest watermark is 0. Why? Because you've made no profit. So your highest profit, your highest watermark is at 0. You have $1,000 that you can draw down. So if on the very first trade, let's say you made $1,000 or you lost $1,000, you're out, you blew your account. But let's say you lost $900 and it went all the way back to 0. You still have $1,000 trailing drawdown because you didn't hit it. Okay, so let's move to day 2. Looks like you made money on day 1 because the highest watermark is now higher. The highest profit that you've made is all the way right there. It trails at $1,000 down from your highest watermark. So your trailing drawdown is now a little higher than it was on day 1 because it trails from your highest profit. It trails from your highest watermark. On day 2, you made some money. So we go to day 3 and you can see that the highest watermark's a little higher now because you made profit. So that's your highest profit, that's your highest watermark, and your $1,000 trailing drawdown begins at your highest watermark. It begins at your highest profit. Okay? Now, you lost some money. We go to day 4. You lost $800, and so therefore you only have $200 left of your $1,000 trailing drawdown. Okay? You traded really good that day. You made it all back plus a little for day 5. Now you're back to your full $1,000 trailing drawdown. So at any point, whatever your highest profit is, your highest watermark, for some reason the visual of the watermark makes sense to me. How high did your profit go? Whatever that highest amount of profit is, $1,000 down from there is your drawdown. That is where you blow your account. You always want to know how much of your trailing drawdown you have left and trade properly based off that number. What I do like is it teaches you, and there's different risk profiles here. It teaches you to pay attention to your losses, and there's punishment if you don't, because you lose your $80 or whatever it cost you. If you felt confident in your skills, you can do this fast track one, and you have 2 weeks to meet this goal, and they charge much cheaper. But you got the pressure of time. Over here, you don't really have the pressure of time. So I do like Elite. They offer several different accounts. Hopefully the max drawdown really is never an issue. But what they do is they give you way more leverage than you'll ever need, so you can hang yourself. There's no way in this, like this account, you should be trading 10 micros, because it's easy to lose $1,000 with 10 micros. So realize they give you way more leverage than you should use, because they know they're dealing with a bunch of gambling junkies, that if you say you can trade 8 minis, 8 ESs, there's going to be a time you will. And if it goes the wrong way and you freeze up, you blew your account. So realize the temptation to over leverage, because they give you all the rope you need to hang yourself. So, and ask me how I know. And some of the bad skills you learn by just paper trading will creep up in prop trading as well. And that's where, and actually it's one reason I love the prop trading, because it puts a little skin in the game. It hurts when you blow up an account. You like, I was stupid. Why did I over leverage? Why did I enter that trade? I did not follow my rules, and so therefore I blew my account, which is all wonderful. It will tighten up your trading, for, in my opinion, so nicely for such a small price. In addition to that, I mean, you know, if you do well, which you should, we have a high probability system with the Elite. You keep 100% of your first $12,500. Take that withdrawal, put half away, take half and trade and fund your real account if you wanted. They 1099 you at the end of the year. It's really clean. Works well. Trade Days, a newer kid on the block. I really like these guys. Going to YouTube and search for interviews with these owners. They're really fantastic. One of the things that they offer, although a little more expensive, but one of the things that they offer is, as your account balance grows, they give you more leverage. So you're earning the right to have additional leverage if you want to use it. So I really like that about, number one, they're great guys. They have a great YouTube channel. Every morning that they do a market kind of analysis of the day. I never got much from it, but I like how they do it. But I really like how, as you grow, the account grows with you, for lack of a better word. With basically, like Elite, whatever account you get, that's what you get. I don't believe there's a way to start with the 10,000 and end up with a 50. You start here, you pass this. This is, you have to trade within these parameters. I tend to like the $100,000 level. Please don't trade 14 ESs. And the reason why is because I try to stick with my leverage metrics. And what it does is it gives me really nice room. It's a $3,000 drawdown. I just like that it gives me that much room, and I'm still going to trade within my leverage matrix. And how, oh, let me go one more. Top Step. They're kind of the big boys on the block. They've been around the longest, I believe, from what I've discovered. And here's theirs, and 165, a little more pricey. With theirs, the problem is you actually have to pass twice. You have to make this $3,000 twice. You pass step one, and then you have to do step two. A lot of people don't like that, but super high quality company, and they use the trade of 8. You get a 90-10 split, which is nice. You get to keep 100% of your first 5,000. But personally, I'm more of a fan of the Elite Trader. They had big sales last week. They celebrated their 1-year anniversary, and they had a buy one get one. So you could have bought one, 50,000 account, which is a great account too. You got to make $3,000 without sliding back $2,000 from the high water mark. That word is now embedded in my brain. Thank you for that, Denny, and thank you, Brandon, for making me correct. So as long as you don't lose $2,000 from your high water mark, can you make 3,000? And you got plenty of leverage to make that happen. And so what I do is I will go in and say, okay, I got $3,000. Where'd that go? No, I got $2,000 of max drawdown. Geez, $2,000 of max drawdown. And I basically will take my leverage metrics and say, okay, how much would I be willing to risk on that? And that's my daily loss limit. That's my daily loss limit. How much of that 3,000 of that drawdown would I be willing to risk on any one day? I've seen people out there recommend dividing it out amongst 10 trading days. What's the odds of blowing your account with you hit your max loss 10 trading days in a row? It only happens when you get stupid and you over leverage and you throw everything out the window, because you could have this perfect, but if you throw it out the window, well, it doesn't really matter. But you should start somewhere with a good guide. Okay. So for example, let's say you were to use the 750, like, hey, I'm willing to lose 750 a day, the drawdown, and that would give you what? 3 trading days. What's the odds of max loss 3 trading days in a row? It should be slim to none. It should be slim to none, especially with our system. And then what you do is you come over here and you decide, because we have different trades that we do that we can identify trend pretty darn well. And what's my max risk I'm willing to take on each of those trades? Now, the one thing I recommend that I talked about this week that it really is important. For example, on this 750 drawdown on the breakout, at this very moment, I'd be willing to take 450 loss. Well, you know what? Emotionally, I'm not willing to take a $450 loss, by the way. For me, for George, that's too much money. That gets to the direction of I start freaking out. I start seeing deer in the headlights, and I don't do well if I'm going to take a 450. So I know under this scenario, I wouldn't be willing to take that much of a risk, where 60% of my daily is on one trade. Although it's the highest percentage trade, it's a breakout retest. I just know I'm not willing to do that. So one of the things to consider when you are putting in how much you're willing to risk, and $50 should be the lowest. And the reason why is because that way you could do a trade with a 10-point trailer, a 10-point stop loss. That just makes sense to me. My lowest risk trade's $50. And I'm about the 250 number. If I lose 250 or more, I'm not really pleased, but I know I can make it back. 150 doesn't bother me like at all. 250 is kind of where it goes, ooh, I don't like that. That's just me. There's guys in the group that it's $2,000 for them before they go eek. For me, it's somewhere between the 150 to 250. But if I've got with the trend, which, was what we've done the last few weeks with like a 95% win rate, I'm willing to take the 250 risk. Now, just because, let's say there was a 6-point stop loss, I may not trade all 8 contracts. I might only trade 4, which really reduces my risk even further. These are max numbers. So when you're coming in, decide how many days you would want that max trailer. You know, you sucked today and you lost every trade, and you sucked tomorrow and you sucked. How many days in a row? And if it's 5 days, well, this thing comes to $600. And now I've got to look at these numbers and go, am I willing to risk 42% of my drawdown on this one trade? And you may not. This might become 150 and this becomes 150. You're like, that's all I'm willing to, that's my max. And in the chop area, I'm not willing to risk that much. I'm just going to drop this to 75. And I'm going to drop this to 75. And now it just tells me what my max number of contracts is based off my ideal stop loss. And as long as you stay within this metrics, you're not going to blow your account. You're going to methodically make money and keep moving forward. And as you get more confident in the system, you might be able to say, hey, with the trend, I'm willing to take that 250. The breakout, I'm still doing 150. But with the trend, a second and a third ladder up, which is what that is, I'm willing to take a little more risk. And then you can adjust those numbers. So know the number of, gosh, that sucks, but I know I can make it back. I just got to be tight. I didn't even get anywhere near blowing my account. You know, if I knew I could lose $600 a day and all I lost was 150 on that first trade, and the only reason I lost 150 is because it was with the trend or it was a breakout. These are real high probability trades. I got lots of room for me to still trade today, not get freaked out about, and still do really, really well. So think about that on your trading is how many days in a row would I be willing to have the max, this loss before I blow my account? And the problem is you'll get in here and let's say we were doing this 50,000 where it says you can trade 80 micros. I don't have anywhere near 80 micros. Like my biggest is 15. What's 15 divided by 80? Hold on. 15 divided by 80. 20%. So my 2-point stop loss with the perfect trade for me, I'm only using, what was that number again? I forgot. 15 divided by 80. I'm only using 20% of the leverage they allow me to use. And so that's the biggest problem, that you are going to have to resist the temptation. But guess what? When you open up your real account with your real money, you're facing the exact same temptation. You might as well do it when the loss is only a bug bite. You blew the account, you lost $1,000 on your very first trade, but you only lost $80. All right, you paid some stupid tuition. I was stupid. I was stupid. When I'm disciplined, and it's funny, you know, I can see myself as the week goes on, I tend to get a little more stupid. At the Monday and Tuesday, I am a perfect freaking trader. And by Friday comes along, I'll tend to start getting a little unwieldy. So you'll learn those things about yourself through this at a very small price. And if you wanted to, just wait a little bit. They're going to come out with another sale here soon. And you get these things at half off, or you can buy one, get one, or whatever. They don't have any sale going on right now from what I can tell. Trade day rarely. Oh, look at that. 20% off your lifetime subscription. So there's trade day. You get a little, they do not give huge discounts. So go listen to these guys on trade day. Go to YouTube and type in, and the owners have done some interviews, and boy, you'll be like, man, these are some quality people behind trade day. I really like them. And Top Step is just the old dog. You're never going to get more than 20% off. You got to pass it twice. But I have funded account with them too. I have several funded accounts with Elite, which is nice. And sometimes I'm trading funded accounts, and sometimes I know I'm not 100% on my game. And to be honest, I'll just trade an evaluation account. I need to feel I'm on all cylinders to trade with my funded accounts. And when I am, man, I'll trade all of them at once using the group function on Tradeovate. So I just think it's an absolute wonderful way to get some skin in the game, to where when you're stupid, you pay the stupid penalty, which is your fee. So thank you guys for the high water mark. I really like that. So the one step's a great account to choose from. The other one I would think about doing is the static drawdown, to where this number never changes. And it also will make you trade smaller, because look at this. This is $625 drawdown. You divide that out amongst 3 days. Now my max risk is 200 a day. So this one's 300 a day. And you can see the leverage that you may or may not be able to use based off that. So it makes you trade even smaller. Because the truth is, I'll tell you the account I used to love. And actually, I still have that funded account with Top Step. I hate they got rid of it. Let's see if this page even still exists. Oh, they got rid of it. It used to have a micros account where you had to make 1,000 without losing 1,000. You could trade 5 MESs. 5 MESs was the max leverage. And I'll be honest, I think that little micro account did me so much good because I could never trade more than 5 micros. So 3 micros was my typical entry. And I love that it made me trade small. I wish these accounts, this was the closest one, 10 micros. That's the closest one to saying, hey, you can't trade more than 10. So if you wanted to dip your toe in the water, get the $10,000 account. It's cheap, 80 bucks. Come in and realize 10 is all I could do. Maybe 250 a day max drawdown. So you come into your leverage matrix. Let's change this to 250. And you just size these accordingly. I don't think you can do that much. Let's go 100, 40%, 100. This is probably what this would look like for me. So I would say 250 a day. I'd be willing to take it that way. I didn't blow my account on any one day. It took 5 days of max losses to blow my account. And this is what my leverage metrics looks like. This makes sense to me. With the trend trade, I'm risking 100 bucks of the 250. With a breakout trade, I'm risking 100 bucks of the 250. That makes sense. In the chop zone, which was almost the entire day Friday, 75 bucks, and the max risk 50. So that's how I look at it. And I feel like until I can take out my max withdrawal, I don't need to be trading with my own money. Because, boy, the little gambler inside of each of us is strong. And we all know it. There might be certain cultures that are better at it. And to be honest, women are probably better at this than men. Men are willing to bring out the large axe. The women will use the smaller axe and just go at it for a longer period of time with smaller chops. But us men, we want to take out that big freaking axe and swing it. And they will give you the leverage to do it. I have literally gotten, like when they do a big sale or something, I'll come in and I will trade the max contracts on every trade. And it's shocking how quickly you can blow an account. I've done it just because I wanted to see, you know, kind of like paper trading. I was like, okay, I got it. It was 40 bucks, you know, half off, you know, 40 bucks. I'm going to trade the 10 micros every, and it's interesting how you just get a little unwieldy. I've done it. We've all done it. You know, and when I used to paper trade, okay, I'd go 20 ESs. I've done it. And then I eventually said, this is stupid. I'm not learning anything. I'm not really learning to be disciplined. In fact, I'm learning to be stupid. And if I made a ton of money off that stupid 20 ES, that's the worst thing that probably could have happened for me. You got to trade small and just keep chipping away. And what happens over time, the definition of small changes. And I put that in my comments. I mean, when I first started, 30 bucks was the max I was willing to risk. $30. That was one MES, right? 6 points. Because after 30 bucks, I'd freak out. I'm not kidding. And then it moves to 60. And then it moved to 150. And now I'm kind of about the 250 mark. 500 is my number where I get deer in the headlights and I don't do well. And I just know that about myself. So I'm not there yet. I can't have $7,000 days. But there's guys in our group, dudes, that make 5 to 10,000 a day. A day. I know because they send me their screenshots and private messages. And I'm like, I am not there. I'm glad you can take what I'm teaching you and you make 10 grand today. I'm not there. $1,000 for me is a monster day. My goal is 250 to 500. That's my personal goal, is 250 to 500. And so I try to trade with that in mind, with my leverage metrics. And then and 300 and 600 are the two. Actually, I have, yeah, those are basically the two I have that I pay attention to. I'll keep those on my screen above my trading view chart, just as a constant reminder. Do I violate it? Yes. Have I had a perfect week where I didn't violate the leverage metrics? I have not. I have yet to have a perfect week where I didn't violate my own leverage metrics. And it just tells me I am not disciplined enough yet. I've got to keep going down the path I'm going down right now until I have at least one perfect week. Have I had perfect days? Absolutely. But I have yet to have a perfect week where I did not violate these. So I'm still learning to be patient myself. I'm learning to be disciplined myself. And I really think the prop trading firms are helping me do that, because if I lost $1,000 of my own George money, I'd rather lose the $80, take the slap on the hand. To me, it hurts tremendously when I blow an account. And I have done it. And what's the number one reason? Over leverage. I'm just being dead honest, and I know you've been there too. The number one thing that's hard to manage is over leverage. Number two is one contract. And that's one reason I came up with this leverage metrics. Like, I got to be able to trade with more than one contract. And I love 3 to 5. 3 to 5 MESs are so great. And you still see me enter with one MESs because it's just not the perfect setup. And I'm wanting, because I know I can trade any trade with one MES and use a 10-point stop loss. It only cost me $50. And that's the smallest little nick. No problem. And I know if it goes my direction, I can always add. But these are a wonderful middle point. And thank you so much for the high water mark. That just helped me so much. It's crazy. Hopefully you don't really need to know that. Hopefully you don't lose $1,000 from your high water mark before you make 1,200. This seems so simple, doesn't it? Just make 1,200 bucks without going down 1,000 from your high mark. And you got 10 MESs to do it. Well, then do it. Pass it. Pass it. Take it as a challenge. Pass it. My gut tells me this should easily be accomplished in a month. Make $100 a day, 12 days. And I'll tell you the other thing that'll happen to you. You'll get to where you're within $100 of your goal. And you'll do something stupid and blow your account. And what hurts the most is the amount of time you put into it. So it's real interesting. The closer you get to that goal, you'll feel yourself start trading differently. You're getting fearful. And that's a wonderful place to be, because we've got to learn to trade in that emotional environment and still be disciplined and straight up and go, nope, this is a with the trend trade. This is what it tells me I can do. And I'm within my risk tolerance. This is the trade I need to make. And I will be honest, I have been within $200 of an account passing, and I blew it in one day. Been there, done that. Why? Because George loves to over leverage sometimes. And I'm learning to be better. I'm not perfect. But I'll be honest, being in the room and being in the group helps me so much. It helps me so much to stay disciplined. But I have done that, yes. And you pay the stupid tax, that fee. Whoever owns this company is probably doing really well because most traders blow their count. Why? They give them too much leverage. Ignore these numbers. These numbers mean nothing. They mean nothing. The only thing that matters is this number and this number. That's what you're doing because you'll never approach these. What's the drawdown? What's the profit? Trade day. What is theirs? Let's look at theirs real quick. And by the day, trade day, as soon as you pass their evaluation, you are actually trading with real funds. So the beginner program, forget this. This means nothing. Ignore it. Max position, 2 ESs or 20 MESs. Here's their scaling up. You got to make 2,000 without losing 1,500, I guess, from the high watermark. Can't lose more than 500 in one day. Keep 100% of the first 5,000 and 80% thereafter. No restrictions on payouts. Make money on day one and you can withdraw it from day one. It's a little different than some of the other companies. And top step, got to make 3 grand. No more than 1,000 loss on a day. No more than 2,000 from the high water mark. You can trade 5 contracts. Now that's 5 ESs or 5 MESs. They don't have the 5 ESs or 50 MESs, which is, I think, a little ridiculous. So if I was to choose a company, I'd probably put Top Step low. I would listen to interviews by trade day guys. Are really great. But when Elite Trader has a sale, I think makes a lot of sense. They have a great little Discord group. I'm a member of their Discord group, and I just go in there whenever there's a problem with anything, or they make special announcements, and or there's something I'm confused about or whatnot. They have a good Discord group, in my opinion. And I don't know a thing about Apex. They're apparently the king right now. They said the only reason they don't have Trade-Evade is Trade-Evade's dragging their feet. It's not them. So when Apex starts offering Trade-Evade, I will look at them maybe. But then again, how many freaking funded accounts do you need? In all honesty, I probably should get rid of my trade day and Top Step and just focus on Elite because I'm spreading myself a little too thin sometimes. I was like, you got too many spread out. You guys that's been trading prop firms, do you have anything to add?
Well, I'll say I've only tried Apex, and they often have sales that are like 80% off. So I'm trading a 50K evaluation account that's like $33 a month.
Yeah, that's great, like man. Yeah.
I mean, I can't.
Yeah,
I couldn't pass that up. It uses Ninja Trader, which I don't mind. Has some neat features. I have an account with Trade-Evade at your recommendation, George. That's fine too, but the value seems pretty good on that.
It's great value because even if you lose $33, you're so pissed.
Yeah, I mean, I honestly I blew my first one.
Of course,
I got very close to where it made more sense for me to just open a new one and let that other one expire. And they recommend you do that when they have a sale. And so now I get those. I'm trying to take lessons learned from that. And I was pissed. I still am pissed.
Yep. I got you.
You know, and
you're more pissed about the time.
Yeah.
Like, why did I do that to myself?
Yeah. And this was kind of before the whole, you started the leverage matrix idea. And so I'm kind of trying to do what you're preaching, and the backsides with the trend, man.
And the gains will be smaller with this, but you won't blow your freaking account. And the only reason the gains are smaller, because I really believe you should use that number of, gosh, that hurt, but I know I can make it back, and not allow it to go to the below the account number. And everyone has that number.
Yeah, and I think it was Michael, you posted about, hey, I'm not learning anything, or I'm just taking trades to take trades because it doesn't matter. I was doing the same thing, honestly. And then I realized if I made money off that, like, that's not something that that's part of a system that I could duplicate.
Is it repeatable?
That was me getting lucky.
Yep.
Like, if I want to build a career from this, then I have to have something that's repeatable. Like, if my income will someday depend on this.
Yep.
So, just putting some skin in the game and trying to stay disciplined. And George, I'm kind of like you. I'm better at the beginning of the week than the end of the week. And I'm starting to realize that. And just recognizing things about yourself like that, I think, can be very valuable.
Mm-hmm. And your bigger paydays will come as your threshold gets a little bigger. The threshold takes a little while. It's months, in my opinion, before your threshold of what you're willing to risk increases. It's I've had people like, George, with your accuracy, why are you not trading bigger? Because every time I trade bigger, I freaking blow up. Because as well as I do, when you trade bigger, your thinking is not as clear. As much as you want it to be robotic and perfectly mechanical, it is not. Yep. And I find when I know I trade outside of my size, that's like going, a lightweight boxer trying to go against a heavyweight. Son, you ain't there. So I'm still, gosh, I'm a white belt. I believe I'm moving the right direction. I believe I've got the right system under my belt. And when I'm on point Monday and Tuesdays, I do so amazing. And you can do wonderful things with 3 to 5 MESs. Wonderful things. And then, let's say I was up $1,000. I'm going to open the leverage matrix a little bit more. But I know I'm only going to be willing to give back a certain portion of that. If I'm firing on all cylinders, there's just days where you are on fire. You are in the zone. You are in the zone. You're seeing the market perfectly. It's bouncing off all your levels. Boy, is there a day where, okay, now I'm up really nice. Yeah, it says three MESs, but I'm gonna open it a little bit today. And that might be the day to do that. But never giving back more than half of your, at some point you got to say, I'm not giving, if I'm up 1,000, I am not giving back more than 500. Why? Because I know how long it takes to make 500.
Yeah, I totally agree. And I now know how bad I feel. It makes me feel when I lose more than that after I've made it.
Just get up and walk away.
Yeah.
It's so hard, but you're so proud of yourself later. And the next day, you're really proud of yourself.
For sure.
Because the emotion's gone. You did the right thing. It just feels so good to do that. And then here's what happens. You feel like you're starting to earn the stripes and the medals and the merits that you need to be a professional trader. You did what a professional trader should have done.
Yeah. Yeah, I had a really good week this week.
Cool.
This past week, actually every day. And one of the things I'm most proud of is not the money that I made in my evaluation account. It's that I was able to stop trading when I felt like I had gotten enough.
Boy, being content. That is one of my harder ones. And, as I mentioned last week in ICT, was talking about being content. And my biggest thing is hard of being content when I'm only up $50. I'm like, really? Am I really going to walk away today only being up $50?
I've heard him talk a lot about that recently. I'm trying to take that to heart.
you know, and then the next day you're up 19 ES points because everything was freaking perfect.
Mm-hmm.
And I have to, you know, and so, yeah. Well, and I'll tell you what's really great is he's training his two young kids, his two young boys. And so he's getting to see what a beginning trader goes through. And, you know, and that's been really, I've been consuming everything he puts out because I'm listening for those nuggets because I know that's what my traders are going through too. And I'm going through it too. We all are, you know, and, so I'm really taking it to heart. Just what you said. I mean, you couldn't have said that any better. But the leverage metrics will keep you out of trouble. It will allow you to scale up your leverage when the proper trade presents itself. I think that's so key. You know, at the very beginning, yeah, use a 6-point stop loss if you need. Use the break level. But as you get a little more advanced, you can open that up a little bit. Once you can start identifying trend and allow yourself to increase your leverage for those trades. And actually, you're not increasing your leverage. You're not. On the other trades, you're decreasing your leverage. It's almost like this first breakout category. That's the max leverage. And because these trades down here aren't as high probability, they deserve less leverage. This is normal leverage, and these are less leverage, in my opinion. You know, and someone still might say, wow, 40% of your daily stop loss is too much money. And you go, yeah, no problem. It might be. Let me drop it down and then just simply adjust yours. And then your greatest discipline is staying within this box. Your greatest discipline. That is what, if you can do this one thing, they like, could you boil it down to one thing? I would say this. I would say the leverage metrics is the one thing. If you can stay within this one thing and know that as you grow and your account grows, so will these numbers here. So will these numbers. Instead of this being $75, this will be $750. I'm just curious. I've never actually punched in 750. Okay. 2 ESs, 3 ESs, up to 7 ESs. That sounds cool. I look forward to that day. I'm not there, but I look forward to that day. Anybody else have any experience with the prop accounts that can give Denny?
Yeah, the only other thing I think about, George, is when it comes to that high watermark is, you know, when we talk about when you're in a trade, like, you know, trailing it, you know, behind levels. But if you trail too far behind, that's where you get in trouble because you give back some at the end. And now your drawdown's smaller because of that high watermark.
That is true.
So that's what I've been trying to balance, you know, and figure, yeah.
Yeah, that's exactly what I was struggling with, Denny, because I didn't want the drawdown to keep creeping up on me. So I tried to get around that by setting targets. And since I haven't been doing this system for too long, I just started at, you know, I'm going to take half to 3/4 of my position off if it hits 2 points. And that means I took a good trade and have some runners or whatever, but just be content. Again, comes back to that topic. Be content that I took those 2 points and that was me taking a trade that worked as long as it was according to the rules of the system. And knowing that later on I may get better at picking targets and recognizing when it might run further.
Yeah, I almost feel like you have to have a target on your runner to that not just trail out, right? So take half off at 2, let your runners go, and maybe at 6 points, you know, it may run more, but just take it because then you don't give back and have that high watermark hurt you, right?
Yeah, I'm using 2, 5, and 10 points. That's kind of what I like. If I can nail 10 points, awesome. And I've missed some big runs, but again,
one MES should not kill your trailing stop.
True.
So please don't limit yourself there, guys. You're missing out on some 20, 30, 40 point on one MES. You're okay. That thing can go 10 points. It's $50.
Yeah, that's a good point.
That should not put your account in jeopardy. You know, and I'm kind of the opinion that if it's ran 10 points and I don't have protection layers, I'm not going to let that come more than 50% of the way back. So really, if it's up 10 points, I'm only risking 5. And if I have protection layers, I'll stay behind the protection layers. So I know at any one point, I'm not going to allow more than, once it gets above 10 points, I'm not going to let it come back more than half the distance. So that's your fail safe for your trailing, you know, for the high water mark. I'm only going to let it really only come back 5 points.
Yeah, and you've got the rest of your contracts off, so it is like
yeah, the rest are off. You only got the
small contract.
My runner is typically a single MES. Rarely do I have more. It's only more because it really bounced and moved its butt, and I go, okay, this might be the trade of the week. So let's not play scaredy cat here, but I'm still going to use the 10 points, come back no more than half. And if price does run like that, you may or may not have seen me. I will release the runners on, I'll change my stop from a normal stop to a trailing. So it starts running with price. And I'll keep one back as my real trailer. So if I happen to be in a run with 10 contracts, I might release 3 of them on trailing stops and let them just run with price. And when they get out, they get out. So I can capture some of that profit. But the other way you do it too, hey, I'm taking some off at this price and this price and this price. That's fine too. Just try not to allow that one little runner stop you from getting something amazing, because it's not going to affect your trail down.
Yeah, makes sense.
Nathan, have you been doing any prop stuff? Eric, any prop stuff? I mean, you saw me fumble here, and I've been very transparent and honest about my fumbles here. Just curious if there's any more. Mainly, it's this. This is the one thing. You know, if you're in sales, what's the one thing? How many calls you make, or how many, you know, this is the one thing for our trading. All right. I don't think I have anything else to really add here. I'm really thankful we did this topic because I was confused on the trailing drawdown again. Geez, how many times have I been confused on it? But the high water mark definitely brought it all into, because on your very first trade, the high water mark is 0. So if you lose $1,000, you're out. So yeah, I don't even know what this diamond hands is. I haven't even looked at it. Whatever. It doesn't matter. What really matters is knowing what your max drawdown is, dividing that out amongst a number of days, and using your leverage matrix to stay within the matrix and require at least 3 full losing days to blow your account. I just can't envision with our system that would happen. And I tell myself that all the time. You have to stay within this box. Stay within the box. And that's why I have them up here. Literally, I screenshotted it, and it's setting up here above my trading view and actually it's right above my trade of 8. And I glance up there and go, okay, what's my ideal stop? It's 7 points. It's with the trend. So I got 3 MESs. I can choose to enter all 3 at a precision. I can choose to spread those 3 throughout the range. Like yesterday, you know, I just recorded a YouTube video that I released before, and I was talking about this trade right here. Let me turn some of this stuff off so we can get a better vision. Where we popped the top and it came back, and I was talking about this backside of why or why not you would have wanted to take this backside.
George, we still see the leverage matrix.
Oh, I'm so sorry. Thank you.
No worries.
Let me switch over to this. So I recorded a whole video about yesterday's trading day, but the main thing was talking about this trade right here. that we finally, I'll bring these back real quick. Finally took out the IB high, came out. There was the optimal entry. But then what about this backside setting here? And I talked about it. I won't go through the whole video, but at the end of the day, I would consider this probably with the trend backside trade. But what did price do? It went all the way down to the bottom of the range. But if you had your stop loss at the 1 point beyond the ladder point, it never hit it, and it came all the way back. And so that's where you got to decide, if I enter all three here, am I going to get scared out here too early? Well, that means you over leveraged. You didn't stay within the leverage matrix. And you got scared out. You should not have gotten scared out. And I know it's the end of the day and it happened to, but you see this a lot, and people will over leverage outside of their leverage matrix, get scared out. Price did exactly what it's supposed to do. It bounced off the bottom of the valley, right at the break level, right at the ladder point. Your stop should have been 1 point behind it. And you go, crap, I took a loss for no reason. Well, there was a reason. You over leveraged. You didn't follow the leverage metrics. And in this particular case, that would have been 12 points. Do you have 12 points on your leverage matrix? I don't. So I can't take that trade. It's not on my leverage metrics. So what trade could I take in this circumstance? 1 second. I want to show you this. I need to change this to that. So what I did is I slid my leverage metrics down here. I'm like, do I have a 12-point stop loss? I do not. That is not on my leverage matrix. You might have a 12-point because maybe your numbers are bigger than mine. I don't have the big enough numbers to have a further because 10, yeah. So I don't have a 12-point. So what trade could I take here? I could take this front side. I could take that one. I'll look at that and go, okay, what's my leverage matrix looking like here? So it's 4.5. So my stop loss is 5.5. That's on my leverage metrics. Okay, I can take that trade. Could I have taken this middle backside? Yep, that's within my 10 points. So I could take that. But I must well, if I'm looking at that, say just take the front side with that, because that's 5.5 points. And on my leverage metrics, I'm going to consider this with the trend. I got to go with 6 points. That's 3 contracts. I could either put all 3 here or spread 3 throughout the range. So you've got to analyze it like that. I went actually more in depth with you than I did in the video, but that's how I'm analyzing that stuff and trying to stay within the leverage metrics and realizing I can't take this backside because of how far the leverage matrix goes. Where's my ideal stop loss? It is too far away. If I wanted to be ideal, sure, you could just use 6 points. Sure, you could just use 2 points arbitrarily, but this price action works most of the time. Such a large preponderance of the time that it has to be followed. Because in this case, it didn't. Well, I argued that this was already tested right here. It was within 1 point. Although I say 3 ticks is tested. First push down, second push down within 1 point. Failed to make a high, failed to make a higher high. Are you really going to try to go long on the third push down? Should think about that, but I'll let you watch that video. So stay within the box. Stay within the box. All right, guys, I think that'll do us. This is always helpful, even for me to say it all out loud to someone else and have your comments come back. It's been very helpful for me. All right, I think that'll be it. I'll publish this for the group, even with the crazy F up at the beginning that I had, where I lost understanding of the drawdown. So that was really great. I appreciate that, Brandon. You staying with me on that?
Yeah, no problem.
I was so lost. I felt like I got to get off. I got to get my thinking back. I got to go back and reread all that. And I can't tell you how many times I've read it and had it straight in my head, and then you lose it. Because that trailing stop loss can be so confusing, but the high water mark made it come to clarity for me.
Yeah, that's a good way to talk about it. I also posted on the trading floor
Oh, perfect.
some info about the Apex, explaining it. And I looked into the different companies, and I'm pretty sure that they're mostly the same. So it's just someone else explaining it, you know,
in a different
way may be helpful.
It is very helpful. So thank you. All right, guys, that'll do it for me. Y'all have a good day.
Thanks, George.
See you guys. Very cool.